So, by now you've already decided you want to buy some stocks. Let's say you want to buy Walmart. Do you go to Walmart, get some groceries, and at the end ask the cashier to give you a stock certificate for 1 share? Probably not. Or do you go to walmart.com, call the customer service number, and ask them if you could buy some shares of their company? Nope, that won't work either. So, how do you buy shares of the companies you want to invest in? Enter the word brokerage. A brokerage firm is basically a middleman who connects buyers and sellers to complete a transaction for stock shares. Now you might be thinking, oh, these middlemen always looking to make money from us. But there are 2 very important functions that brokerages have, without which, to be quite honest, the stock market would be quite broken. So let's go with our example. Imagine you actually find the right people in Walmart to sell you some shares. You go to their investor relations department and you manage to get someone on the phone. The first issue you face is that unless Walmart is issuing shares currently, they can't sell you any. And because of that, now they will have to call some of their previous buyers and ask them if they want to sell some shares so you can purchase them. But then you ask for a certain price, then Walmart's rep would have to go back and negotiate a deal, etc., etc. This quickly becomes quite the mess. So instead, what brokerages do is they use modern technology to automatically match buyers and sellers. Within a click of a button, you press buy, and a second afterwards, you have your shares. This would have been impossible without the brokerages as an intermediary. Second, no offense, but Walmart doesn't really want to deal with you. I mean, sure, if you're Warren Buffett and you're planning to invest $1 billion, you could probably call the management. But for you and me, they really wouldn't lift their finger and it would be a complete headache. So, step 1 in buying a stock is choosing a brokerage. The brokerage firms consolidate the investments of tens and even hundreds of thousands of investors and invest on their behalf. Of course, for that convenience, they charge you fees, but the modern brokerages have such low, in some cases almost non-existent fees because of technology and competition, that unless you're day trading, doing tons of transactions every day, it doesn't really matter that much. Now, the question comes, how do you choose a brokerage? If you try to Google it, you will find dozens and dozens of companies offering you their services. For the purpose of this guide, I will divide the brokerages into 2 categories. The traditional, older, larger brokerages is the first one. And the second one is what I call trendy apps brokerages. The trendy app brokerages are companies like Robinhood, eToro, and others. I'm honestly not a fan of them and have never used their services, and so I cannot speak from experience, but what I know is that most of these companies design their apps in a way that is really easy and intuitive to use. However, they also design it in a way that makes you trade more often, and trading often is the enemy of the long-term investor. If we compare that with the interface of an older, more established company like Interactive Brokers, it's pretty clunky. The navigation is a standard one, at least for the web version. However, I actually like it that way. After all, I'm not logging into my account to be entertained. Speaking of that, the older, more established brokerages are brokerages like Interactive Brokers, Fidelity, Charles Schwab, and others. These are the biggest, most established ones and the most heavily regulated. When it comes to choosing a brokerage, I like being old school. I like sticking to names like these because the security of my assets is too important to gamble with it. I want companies which are heavily regulated in multiple jurisdictions, including the USA and the EU, have been around for decades, and hold money for the wealthiest investors on the planet. If those conditions are fulfilled, I really don't care about how sleek their design is or if I will save 20 cents per transaction on fees. Remember, we are investors, not traders here. If you recall, I said that brokerages basically aggregate investors' funds and through economies of scale are able to offer us this great service of almost zero commission investing. However, this poses the question that is on every investor's mind. What happens to all my stocks if the brokerage which I invest with goes bust? After all, do I even own my shares if they are investing on my behalf? These are all questions you should be asking, and I want to put your mind to rest. The magic word here is segregation. Segregation of assets. What regulated brokerages do is they keep the assets and operations of their company separated from those of their clients. So basically, if John invests in Walmart stock, his shares are kept separately from the shares of Richard, who also invested in Walmart stock, and all of these assets are separated from the brokerage's financial operations. At least this is how regulated large brokerages operate, which makes it even more important for you to use such. In the event of a brokerage failing, basically what happens is your stocks are transferred to another competitor of them, and most likely with a little bit of turbulence and wait time, you will have to log into another website. but your assets are still yours. Not only is the likelihood of a large regulated brokerage failing close to zero, but if it happens, it's not the end of the world. If you invest in Coca-Cola, you are still the owner of the shares in Coca-Cola, and which brokerage exactly manages your investments won't make that much of a difference. Also, your investments, and that includes the cash in your account, are insured up to certain limits depending on the country you're in. In the USA, it's up to $500,000, for example. And remember, you get your shares no matter what if you use a reputable brokerage. So this is just an extra precaution and a safety net for your cash in your account. All right, now that you know what stocks are and how to buy them, let's move to the juicy part. How to build your wealth and create the ultimate passive income machine that will last for generations using the stock market.